Hi, my name's Henry. In this video, we're touching base on Palantir, which just made its Wall Street debut. Palantir Technologies is a secretive data company best known for taking on controversial work for the US government, and it's finally available on the US stock market. The company began trading on the New York Stock Exchange under the ticker symbol PLTR just around 1:30 Eastern at $10 per share, up from the reference price listed by the New York Stock Exchange of $7.25 per share. The company began trading on Wednesday, and the market is already valuing this company about $20 billion. Hot damn! The company isn't making money yet, and there is a whole lot of bad and good that we'll have to talk about in this video. Put your secret money making hat on and let's dive into your daily dose of Uncle Henry. You like the new quote that I made up? Well, what can I say? You might as well like the smash button and join the dopest family on YouTube with a subscribe. Where should I start, the good or the bad? I guess we can start with the good because I am excited about this stock. In the 17 years since it was founded, Palantir Technologies has received financial backing from the CIA, Central Intelligence Agency, became one of the most valuable private companies in the United States, and earned a seat at the table alongside the biggest tech companies in meeting with President Donald J. Trump. Co-founder Peter Thiel is the CEO, and that man has a net worth of $2 billion and was the first investor in Facebook. He's either really lucky or really smart, and most wealthy people are usually smart since it's not easy to get rich. If you disagree and you know some exceptions, drop a comment. I can see some funny stories developing about rich, lucky people in my comment section. Anyways, Palantir was founded in 2003 by Peter Thiel along his buddies Stephen Cohen and current CEO Alex Karp. The company provides data visualization and analysis services to government agencies and commercial clients, including the US Army, Navy, Air Force, as well as the Securities and Exchange Commission. Palantir is an interesting big data software company posting accelerating growth numbers. While I have several concerns about the company that may prevent me from investing now, there's a bull case to be made for scooping up Palantir shares when they become available at the right price. By the way, Webull is offering 2 free stocks if you deposit $100 into their app. I think these guys have a nice app and it's a good deal, so if you want to check that out, I have the link in my description. Back to the video. Palantir revenue has accelerated in the first half of 2020 to 49%, well above the 25% growth posted in 2019. That acceleration might have come from increased usage amid the pandemic at the US Department of Health and Human Services, which is a Palantir customer. However, Palantir thinks many of its current and potential customers now realize they need Palantir's big data operating system more than ever in times of crisis. Data is essential but expensive. I've said many times on this channel before, but data is the new oil. All companies have to manage their data, and that's why I got a degree in data analytics along with my finance degree, only if I use my degrees a little bit more. Palantir believes there is still a large total market opportunity of $119 billion. That includes both US and allied government software spending of $63 billion and a commercial market opportunity of $56 billion. Palantir has only captured less than 1% of the total market opportunity. I think that's what makes this stock attractive. The runway for data and services Palantir can be involved in could grow the stock tremendously. I mean, look at it this way. Let's say that you take 10% of the market opportunity. That's about $12 billion. Now on screen, I'm going to put a 40% profit margin and multiply that by 12 billion to get net earnings, thus giving us $4.8 billion in net earnings. 40% is realistic, by the way, because this is a software company. Median software companies have profits of 76%. So now we have the earnings of Palantir at 4.8 billion, slap on a 11 PTE ratio, which is price to earnings, on there, and we have a company worth about $50 billion. That's a somewhat rosy picture despite its sky-high valuation and optimism, not to mention powerful client base. Palantir is not profitable yet or even close. The company lost nearly $600 million in both 2019 and 2018 and is on track to post another big loss in 2020. In its direct listing prospectus in August, the company warned investors that it may never turn a profit. The company expects 2021 revenue growth of more than 30%. That suggests the stock at the opening has a value of around 16 times projected 2021 revenues. That is not a cheap valuation by any stretch. That's higher than established software companies like Microsoft and Salesforce and Facebook. But the good news is it is far below the current valuations for fast-growing companies like Snowflake, which I made a video right here, at more than 100 times sales, and Zoom Communications, ticker ZM, they are trading at 60 times valuation. So I guess there is some decency to this stock, relatively speaking. I'm generally reluctant to buy new issues with lots of press surrounding them, and I have some specific concerns around Palantir's customer concentration, corporate governance, and high stock-based compensation. Many employees get a six-figure stock-based award, especially engineers. And although that is not a bad thing in general, when a company is losing a lot of money, that is not a good thing. I'm neutral on this stock, and personally, I think it's a little expensive, but I'm definitely interested in following this stock and seeing what happens. One thing I do like is revenue from government contracts made up $345 million, or about 53% of its overall revenue in 2019. I think that's solid since government money probably isn't going to run out. Another reason to believe in this stock is the very skilled management. So overall, my strategy here is to wait for the stock to go down to its reference price of $7.25 per share. Until then, I'm waiting on the sideline. One interesting thing I want to note is Asana, ticker symbol ASAN, the work management software company, also went public via a direct listing on Wednesday and opened at $27 per share, well above its reference price of $21 per share. It's also falling, and its first full day of trading was on Thursday. It also followed suit with Palantir stock.
Alex, one of the other questions people ask is how to comp your company, meaning what are the comparables? Should this be considered a technology company, a SaaS company, or should this be considered a much more traditional consulting company? Can you speak to that?
Well, I think what the investors are seeing is they're asking the question at this point. They used to ask, is this a company that builds software for the government, and how do they build it? Of course, we always sold this as a license. Then they saw our margins in the first half of the year around 80%. So I think the real debate now has moved significantly away from, is this software, is this services? Because although people think we're very smart, we're not smart enough to get 80% margins off of a services company. The question then is, how do you comp it? And honestly, I think that's something investors will have to figure out. We're not focused on that. We're focused on, we are going to be the most important software company in the world. And not focused on that. We're focused on, we are going to be the most important software company in the world. And people could be like this, it could be like that. We are going to deliver the world's best software with the world's most efficient way of delivering it. Investors will decide what's that is worth to them. And I think you'll find in a number of years that there will be a consensus. Palantir is a truly special software company that is arguably the most important software company in the world.
So for those that are interested in companies that do a direct listing, these are two great businesses, but their stocks are not quite there on my buy list. Yes, you can have a great business, but that doesn't mean the stock or the business is valued at a good price to get into. You can have a situation when there is a very good business, but the price is just not right. I hope that was an honest review and was very helpful for you guys. Remember, it's good to be patient in the market and let the good opportunities come to you instead of jumping on opportunities that might be a little expensive. You don't have to buy every stock to make money investing. Pick the good ones and hold them for the long term, or use options to get into them at a good price, which I will teach in my course coming out at the end of this month. There is a link. The link is free and you can drop your email there if you're interested. As I develop and finish the course, I will give you guys some updates. Thank you for watching, and do me one favor. Sign up to the options email because I'm so excited to send that email out. Be aggressive in learning, but be safe in investing. Give me that fist bump.
No one ever sees me.